Good afternoon, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and watching the After Hours Market Scene with Ryan Mastro from OptionsRobot. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, OptionsRobot, Ryan, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only. With that, one last look at the disclaimer, and let's welcome Ryan to the show. How are you doing, Ryan?
Doing well. How are you?
Great. Let's share your screen. There you go. Market Chameleon landing page. What are you seeing today?
So let's just go over the charts here real quick. There's a lot of stuff to kind of unpack. We haven't talked in a while. It feels like a week, but a lot happens in a week. We had a pretty big sell-off last week and a good rally here on Friday and yesterday. So on a Tuesday, we're going into jobs. I think the one thing that people are a little concerned about is what the jobs are going to print. Rumors are anywhere from 650,000 to over 1 million in terms of taking away jobs from last year. It's a little concerning when you get a lot of the talking heads come out and say, oh, a negative print shouldn't really affect the market that much. But a big negative print's a little bit scary. Now, again, we could bake it all in and, everyone's assuming it's bad. So I think that's what they're trying to do, is bake a lot of this information in terms of, what we see tomorrow morning. I think we're going to have CPI at the end of the week as well. So, these are the things that are on the horizon. Today didn't feel like a great day. I mean, it just kind of felt like it was a little bit heavy, right? We had a good little reversal in the SMH where they were able to kind of recover it and bring it back up, but still negative on the day. Even though most of the semis were up on the day, they kind of finished, decent. So I think that's important to kind of keep an eye on. Obviously we had some sectors. I would say the XLF was weak today. We saw a lot of these big banks roll over, right? Goldman Sachs, which was looking really, really good, basically, had a back up and a down. JP Morgan ended up, I think, weak. Morgan Stanley ended up weak. So you start looking at some of those names. It could be, our interest rates going to now become a problem. Now, on the flip side of that, we started to see names like Home Depot with a really good looking chart. Let me just kind of pull this back a little bit, because starting to look interesting here with almost a cup and handle, a head and shoulders, whatever you want to call it. I'm not a stickler for their rules, but I can kind of see a complex head and shoulders in here where we get a breakout, could start to put together a nice big number. You go over to LOW and it looks like it's already broken out, right? I believe this is through or right at its all-time high right there. So that looks pretty good on the chart and ready to kind of keep going. Now, this was moving. I think this kind of got lumped in with the builders. So it was more like Lennar, big green candle, a Pulte Homes, Toll Brothers, Beazer Homes has been absolutely on fire. So, you gotta go where the bulls are running. That's kind of something that we watch on a regular basis. So trying to find where the money's moving into. Maybe it's a little bit of rotation. We did see some rotation out of some of the defense stocks. So Lockheed had kind of a bearish day. Northrop Grumman was down. General Dynamic was kind of blah. So you're always trying to look at kind of where they're rotating. Now, one thing I do want to note before we come into the little scanning is software was like talk of the town last week because they were going down. Names like CRM that was getting beaten up, and they're trying to round that back up here today. Didn't really go anywhere, right? Everyone says, oh, well, it's software. It's no big deal. We had even some of the last week, we had some of the database names like Snow got beaten up. They rallied big time today because of Datadog's earnings. So DDOG, that got up really well. That helped. I think Dell was still up on that. Snow was up on that. MDB was up on that. Oracle was up, looked okay. So, a lot of these names are kind of now trying to round back up from the database perspective. Cybersecurity started to rally because of what was going on. It's like CRWD and PANW. So they looked really strong. PANW didn't finish well, but Zscaler kind of still has a little bit of a green on the bottom there, ZS. So a lot of names to kind of go bottom fishing on in terms of the bigger picture. So I think there's a lot of opportunity, whether you want to jump into the home builders or maybe place some small bets on, some of the banks if you think some of those banks feeling a little bit like maybe overbought, or maybe they want to roll over. I saw one today in PayPal I thought was interesting, where we started to run back up a little bit and starting to look good back into this gap. So that could be one that you put on the radar here in terms of that. Now, let's just come back over and actually look for some of the opportunities. Let's go to the unusual options volume first to see if there's anything that really jumps out, chart wise, and click on that. There we go. It'd be smart if I could click on it. So Target was one of those names. If you looked at the chart real quick, you can see that it was, again, Costco was down, Walmart was down, Target kind of fell off here a little bit. So maybe some bullish paper, but I feel like the bullish paper that came in probably had some short stock tied to it. So stock went down. You want to keep an eye on Walmart, and that rolled over. And Costco was another one that rolled over. So that was just kind of really ugly today in terms of big move on that one. You look down, XLF, we already talked about. This was listed as bullish paper that came in, but with the sentiment, again, starting to see those names roll over a little bit. Unity Software, bullish. IGV is the one I talked about in terms of that software. If we just looked at that one real quick, this one is, again, the ETF for software. So we're getting a little bit of that rounding bottom in here. Let me just clear out the volume so you can see a little bit better. So a little bit of a rounding bottom. I know a lot of people were kind of stepping in to buy this. Another one in this space that jumped really good today was Shopify going into earnings. So this is one that I think was on fire. Probably not going to touch it because of the earnings. So that has to be on your radar. Looking at, let's see, down through this list, Shopify was in there. ServiceNow could be one. Still kind of bearish. There may be some bearish paper in this one. And if I just go over to the charts and look at, what could be kind of spotted here, is there really an angle that I want to play yet? Not yet. In my opinion, not yet. There's nothing really here that says on the charts, like, some people would say, I'm going to draw a trend line down through this, and this is my first bull candle I want to jump on. But I would want to see some kind of confirmation that the entire space is going to get bought. And right now, I think with what's going on in AI, and this basically came from Microsoft commentary and Goldman commentary, that the AI automation is crushing and going to crush the software companies over the next 5 years. So I think a lot of these numbers, a lot of these names have basically fell off and felt a little bit heavy on a lot of those. So Datadog bullish was great. Net we already talked about. Marriott, again, I'm not going to be jumping into something that is at the all-time highs. And, this one is printing that and touching that all-time high. So, I mean, by far, right? Is there some laggards in this space that maybe you want to play? Something like a Hilton already had a great run. Hyatt came out, a Wyndham, right? There's several names. Maybe the Wyndham is one that you like. We can get back up through the highs here as a laggard. Okay, it's got a little bit of catch up to make, but again, I don't know enough about the company or the fundamentals to say, hey, this is on par, or they're going to do the same things as some of these other luxury brands. So, I'd just be a little bit cautious of jumping into something like that. Clearly, Marriott is out in front and running. I think we've seen a lot of that from the airlines, the cruise lines, where there's been a lot of luxury spending. So people are coming out spending money, and again, it's great for bookings, but is it going to continue? Now, I did see a chart today of home delinquencies, auto delinquencies, credit card delinquencies. Everything's going up, and student loan delinquencies is absolutely off the chart. So I think we got a bit of an issue there that we're going to want to keep watching in terms of how this starts to play out. Now, a couple of things I've mentioned, rumors about us going to war with Iran, that's been out there. So I think that is starting to pick up pace now. There's a lot of talk that it could come in the next couple of days here. So I would definitely be aware of that. What's that going to do to crude? Crude will typically go up, especially if they're bombing Iran and they're starting to take out any of those infrastructure plays, any of the refineries or anything like that, going to cause a big problem. So oil could go up, just because they won't have access to Iran's oil. So that's one. Two is the Japan kind of debacle. So, how do you look for, what's going on in Japan? Well, I think you want to watch their yields, right? The yields are they're very short term, 2s, 5s, 10s. Longer terms are going up as well, but you really want to pay attention. They're not really scheduled to increase rates until, I believe, late March, April, early April. But again, that could continue to get pressure. If interest rates keep going up, they may have to do an emergency meeting because they keep kind of creeping up there on that. So I'd definitely keep watching those. So let's get out of these, go back into some of the stocks, and let's look for, actually, let's come down into here again because, you know what, I'm going to go back home, and we're going to go to, do I want to do the scanner this way? Yeah, we can look at that. So let's do the IV scanner. So these are names, and again, there's so much power in this in Market Chameleon. I encourage you guys to look for different opportunities. Scan it, you know, look through what you can scan on. The data here is phenomenal, right? So be able to look and scan, see where you are on your implied volatilities versus your historicals is huge. So I look at this on a regular basis. And again, here's your 1 year historical. Here's where you are in terms of your IV rank percentage. So again, are we near the highs? Are we near the lows? Are they buys? Are they sells? Again, typically when you're at the high of a range, you want to be basically selling. You want to be on the low end of the range. You want to be a buyer. So again, looks like it's somewhat color coded in here. Highs are red, and you know, kind of the blues down here. Middle's a little bit of orange. So you know, these are names that you want to start to look into. Again, do you see anything that jumps out? Is Spotify a play? That means, so let's just look at Spotify real quick. Spotify jammed up today on earnings, and it's probably not one I'm going to touch right away. I think implied volatility can continue to come off here. We actually put an iron condor in this one today just because implied volatility was still up enough that, okay, we got a nice range. We can play against the range here and let that implied volatility come in. Even if it comes in for a day or two, we should be able to make, you know, 50, 60 cents on a $2 premium collection and just get out of the trade. So that's something we are looking at. And then just kind of looking down through this list, nothing really else jumps out at me that says, and I'm trying to look at combos of here of, if you see something at a higher implied volatility, like take a CRDL, you got a high implied volatility and you're looking at opportunities. So if you have an opportunity and you feel like there's something on the charts that you like, you just got to take that into consideration when you're looking at trading. So something like this, do I think this could continue to go higher? Well, if I know I have implied volatility, me versus buying just a naked call because I have that implied volatility, we know it's going to go down as the stock continues to go up, that maybe I'd rather be doing one as a call spread, so I want to do a call vertical, or two, maybe I want to sell a put spread if I think it's going to keep going higher. I probably would wait in terms of the reversal candle that we had today, and if we started to see something go back up, then I'd probably look to sell some type of a put spread. I'm not a big fan of just selling naked puts. That's me personally. You can do what you want. It's just I like to keep my risk reduced and my margin low. So if I can do a $10 vertical put spread where I sell the closer to the at the money, sell and buy further out as protection, that allows me to bring in a credit spread, and at least I can participate if it goes up in a high implied volatility scenario. So that one, again, something like CRDO may not do it quite just yet. If we look down through Hasbro, Shop was good. Quest, let's see what else is down here. That Hasbro has been moving pretty well. So we look at that real quick in terms of the chart as well. Let's see here. Hasbro, I thought we had a nice little run out of this. Yeah. I don't know how about you guys, but I don't know if I really want to buy in a massive cup and handle here and just kind of zooming out on this one. This is a long time coming to get all the way back up to these levels. Feels a little bit overbought. I could probably throw in some different indicators to show you that, but I think that would be a little bit sketchy here, right? Not something I really want to play at the moment. So let's come back to where we were. Probably want to go back through. All right, that's my fault. There we go. So again, Marriott. Just trying to find a good name that we can jump on that would You know what? Let's go back to something like the Home Depot, right? Just to kind of talk about that real quick. And that's one that we identified as still in the pattern, still somewhat in a consolidation in here, right? We looked at this, analyzed this a little bit better. So let me zoom in for you. So you can see we're kind of right at that zone. I like the potential breakout. So are they going to start to run this similar to what they're doing at Home Depot? Are rates going to be a factor here? Does the jobs become a big deal tomorrow, right? So this could be one. Maybe you want to set an alert, maybe using the close over here or the high right here. Maybe that high is going to be the interesting one. So that high is 391.78. So what I would do is I would go over to my entry bot and set up a trade that would allow me to participate on the upside. So Home Depot, we'll just say greater than 391.78. And it shows you where you're currently at right now. Shows you that we are offered right now 390, so it is moving up. I'll add an option. And if we were to get into this, let's play. I'll do this week, right? We'll watch it, but again, I'm going to play the 390s at the monies. I'll do it at a quick trade and then click create. And then what this gives me is automatically gives me the ability to set up a template for how I want to manage my trade. I'm not even in the trade yet, but if I do get into the trade, I have the ability to set up a management for it. So if I were to come in here and do, let's just do this one for example purposes, and I can see, really quick, I have one that the option rolls up, I'm going to get out, or I'm going to roll up. If it goes down, I'm going to get out of the trade. So it basically adds a stop and a roll for me as the stock is moving up. And I can do that one click. It adds in 7 trades. So 1, 2, 3, 4, 5, 6, and my final exit way up here will be 7. So 7 trades on one click by deploying the template, something you can't do on any other platform. So a couple of things that I haven't really talked about, and I'd like to do, take 2 seconds to do it because I think it's very important. One is the pause bots, and you guys may see this here. Pause bots allow you, for example, if you see news that's coming out or something hits, Trump makes some statement, whether it's good or bad, and again, regardless, but he has the ability to move the markets that way. So whatever, it could be the Fed comes out with an announcement, or we start Iran. So whatever the thing is, you may want to pause your bots, right? And that's why we created this. So the pause all bots basically says, I'm going to pause everything, right? Because that's the advantage we have is you don't get run over, right? I don't want to get run over if I have a bunch of bots out there where it forces me to roll things that I didn't, on the market. I didn't even know the stock market was moving that fast. So if you can pause all bots, now I can resume all bots, or I can go into each specific one. So if I'm worried about my downside, I could say, unlock that one and not have this one go into play, or I could close this one out and cancel it, right? So this gives you the ability to say, hey, I'm good on the downside. I just don't want to get run over on the upside. Or maybe I want to move this up, another percentage, or I want to move it up to a couple dollars, whatever I got to do, because the stock may gap up for whatever reason. So that is very powerful, in my opinion, to be able to do that. Now, the other thing we have, and I'll just kind of delete these to show you as an example, but the other piece that we have is the gap protection. So I'm in something like Home Depot. It's a pretty big stock. Let's say I just think I want to roll this up every $5. So if I say 395, I want to roll my option, and I'm just going to roll it up to the at the monies, and I do something like that. We'll do quick and click create. So that's, again, takes a second to build that out. And I'm just doing this for example purposes. So that's my preview, right? Now I can add something. Okay, if I roll, what do I want to do? Maybe I want to do another roll. So let's do another one. I'm going to do it the exact same way. I'm going to say 400, gets up to 400. I want to do it again. So I want to roll, keep it the same, and I'm going to go to the at the monies. I'll do it quick. Now, what this does is it pulls up a gap up override. So what does that mean? So if I were to gap higher, so tomorrow morning, if I put this on, I was able to get into the trade, and for whatever reason, news comes out and stocks automatically start to gap for whatever reason. If it moves up, and it moves up quickly in a big print, it's going to automatically roll me up to the 400s if it goes over 400, right? It won't hit the 395s. Now, if you're at a regular broker, you're going to get stuck at the 395s. It's going to roll you, and then it's going to basically try to roll you up again on the 400s. again, you're not going to be able to, it's going to be tough to do that. And you're not going to make much money. You're going to pay a lot more commissions. So the reason we did this is because we found that, okay, this is smart automation. We can do this, right? We don't have an order that's stuck at a broker where I have to go quick, go cancel it. We're managing the order live. So once it goes through, then you're going to get, it goes to your broker, and we can manage the trade for you in terms of the bid-ask spread. That's why I use the quick. So the other part of that is the gap protocols. I like it a lot more for when I'm in a trade and I know stocks that are like pretty, I would say gap a lot for like let's say any of the ADRs, like a Taiwan Semi gaps a lot, or any of the big names in a recent like MU, SanDisk, or any of those. So that to me is a very powerful tool that I wanted to share and just make sure you guys understood that this is available now in the market, right? This is not something that you have to kind of dream about, because this is something I would want as a trader. That's why we created it.
Hey, Ryan, we got a question concerning the tools. Ketchin Cookin is asking, Ryan, I don't see the roll by levels on my platform.
So if you are in here, so I believe you have, oops, sorry, I'm on, let me go, which one was I on? Maybe I closed it down. I must have closed it down. All right, I'll go back to here. So I think it's mainly for the technical level. So there is an additional level there where we supply those levels. It goes off of our templates. So, again, because of I'm a CMT and I've gone through all that fun stuff, I created all these templates in here so that I can basically look, and I track all my templates. We have other things available like this one here that you can, this is a tool that we recreated and basically gives additional levels. Now you can kind of create how tight you want them to be. So that's another support and resistance level, but you do have to be on the upper level to get that component if you wanted to roll by those levels. So what they were talking about is in here. If I go back to that Home Depot trade down here, and I want to do another level, right? I could go in here and say stock value and is greater than, it comes over this level. This would give me additional levels, right? So I could say, which one do I like? Again, depending on, what service you're in, or how aggressive you want to be. You could do it every couple of dollars. You could just put it in. You could do it as a percent. You could do it as moves up from the acquisition price. So there's all different types of, drop downs that you can play with to help you out in what you really want to do. You could do it off your options value. So if my options value is, delta, or what your value was since inception, or we have a percent drawdown from your max gain. So if a stock does run up, what's my max drawdown that I want? If it runs up 50%, I don't want it to come back more than 10% from there. So a couple different tools on that to help you out. So yeah, I do apologize. It is the upper level of, again, if I wanted to do that from a roll perspective, it is on the upper level. I wouldn't say it's necessarily worth it if you are, depending on how active you are, right? If you're an active user and you don't want to have to go look for levels, then maybe it is. But for the general purpose, I think you can usually find, a couple levels that you want to drop them in there. So that, again, it's depending on each user.
All right, we got about 7 minutes. You want to go for some questions? We have some different questions.
Yeah, let's go.
First, Cisco, is it overextended? Was up this morning, then pulled down with everything else. CSCO.
It finally, and you would respect this as being a trader back in the day, it has finally been able to retake its 2000, and it's not going to give me all the data, darn it. I don't know if it'll give me all the way back there. Nope, not giving me on this system. But finally retook its high from 2000. So that was happening, I believe, in the last couple of days, and had a big breakthrough. So a couple different ways to look at that. I would look at something like an RSI, and you are clearly overbought on a big run here. Now, they've been trying to kind of rebuild or kind of rejigger their business around. I think this is getting to a point where you are probably a little bit overextended, maybe a little bit heavy. So it doesn't mean to get out though, right? I would say at minimum what I would do is roll, right? So if I'm in something that I have profit on already, I would roll until I start to see something where I feel like, okay, we're starting to pull back. So for example, maybe it gaps up tomorrow and you get a red candle. Maybe at some point tomorrow, if you are in that, I would roll up higher and basically lock in whatever I can. And typically when I get into this environment where I have a great run, I'm going to roll to the out of the money, where typically I would roll to at the money or maybe even slightly in if I'm in a good trade. But when I'm getting really high, I would roll to the something like at the money or out of the money, maybe a 40 delta, because I want to minimize that exposure. And then what I would do is potentially to even reduce my exposure is sell something even higher than that. So I turn it into a call vertical and say, all right, the worst case is I have like $1, right, invested in it. So that way I'm locking in as much as I can. If it does pull back, you're really not going to worry about the dollar. You can still get out of it for 50 cents or so. It's not the end of the world.
Perfect. We had another question. Amazon, is it consolidating after the drop? Is it time to get bullish again or put it in on the shelf and wait? Thoughts on Amazon?
So Amazon and why? Oh, I'm on a monthly. I apologize. So monthly, we go back to dailies. I was going to say that doesn't look like Amazon. Let me just recenter this for you. So let me get rid of the volume as well. So looking at Amazon, I actually like this trade. I put this in yesterday for one of the services I run, and we used the high from yesterday. So that was 212.81. So we did come up, retest that level by a little bit here today. Came close, but no cigar. And I don't have to force a trade here. So to me, I would wait to let the market show you something. And I'm willing to give up a couple of dollars here on that confidence. So to me, that's the confidence builder. We can get above that high. That's buyers willing to step in and move it to a higher price and willing to keep buying at that higher price. Today, they didn't have enough juice. There was not enough buyers that stepped in a kind of a sideways market. So tomorrow, we don't know what it's going to bring. Ideally, yes, I like the trade because it comes back into the gap. And ideally, they're going to want these big mag names back above the 200 days in terms of the bigger picture. So I like the trade. Otherwise, I'd probably be neutral to potentially bearish if we start to see things roll over and we start to take out maybe some of the lows back in here. So I'm completely indifferent on this one. I don't care which way it moves. I don't have a position. But I would say bullish if we get above the high, and definitely bearish if we start to get below the low and everything else is going down.
Perfect. Google, is it a bearish play now is the question?
So I would say no. So, and here's the reason why. Google, why it's down today is mainly because they put out, I think it was $20 billion in terms of trying to raise capital, 20 billion. So put that on the books here. So that really was not a good look. I think there was another 3 billion in some type of a Dutch auction or something like that was going on today as well. And when you look at it from a company perspective, I think they are at the top of every industry that they are in, and they're basically printing money. So them taking on $20 billion, right, or debt, however they're going to do it, it doesn't really scare me. I think it actually adds more speculative fuel to the fire. That what can they do with it? What are they going to do with it? Is this for an acquisition, or is this going to basically supercharge something else that they need, right, to get things going? I think they're really kind of doing a lot of really cool things with this, with their agentic AI now. So I think this is going to be out of the winners. I think they're forward enough thinking and can see the writing on the wall, and they're I would say more adaptive than a lot of these other companies. So I still like it to the upside. Am I in it? Not yet. I was waiting today, see what this 20 billion did. Just kind of hung out here. So tomorrow, maybe we get back above the 50-day. That would be one that you could start to look at as a bull.
All right. KO just had earnings.
Yeah.
I didn't think it was too bad. Had a 2.1 relative option volume today. Seems like maybe bullish sentiment. Wondered your thoughts on it.
So look, these have all gone up, right? I mean, it doesn't really matter about the company. They've all had small pullbacks here. It's all kind of all linked together, right? Consumer staples have been, right in here. So I think with Coke, they said they're going to supercharge their marketing. And again, I can't say I'm really bullish on that kind of, verbiage, but if you're in it, again, I would definitely be taking some profits. You've had a good run. You've gone up from 70 to 75. It's not a massive mover, right? The stock doesn't go really a big distance. So this was a breakout, and I would consider it a gift. So I would definitely be taking some profits off the table because, again, from a consumer staples perspective, how far are they truly going to go? How much more money can they make? It's not a big tech company. They deal in their own goods. So I would just be very cautious. If you're not making new highs anytime soon, you're just going to decay away and kind of stay here in the zone. So I'd be very careful that make sure you're going to roll and just lock something in, maybe even sell something up above the 80 line. So if you do break out, you can always buy it back, but then you have some premium against it. At least you're reducing your exposure.
All right. We had a question on the silver stocks. You didn't mention any silver today. Thoughts on the silver, the miners?
Yeah, silver's been one that they keep kind of holding in check here after the big sell-off. I expected a much bigger rally. There's some miners that have been able to retake these highs, so they look decent, a little bit better than others, like a PAAS. There we go. You can see they took out the highs back in here. A CDE did it. I think an AG did it. Right, but then you have other ones like Hecla, the one I've been a big fan of, is not back above that high quite yet, kind of rolling over here. So I think they're consolidating in here. I haven't seen any major change from what's going on in Europe and China in terms of demand. So I think that continues to be a consolidation in here. And then if we get any kind of change up from maybe the Fed potential nomination of Warsh, which I heard some rumors of today, and maybe gets someone a little bit stronger on gold, silver, then I think this could be a much bigger play to the upside. So I'm still bullish. I'm still holding. And I would basically be looking to buy more of the miners because they're the double whammy. Not only is silver cheaper than gold, but the miners still lag the price of silver where it should be because they're still expanding their margins. And I think the miners are going to have some pretty good earnings here.
All right, last question. I know it's a little after 5,
Okay.
but we might as well get to it if you can.
Yep.
Mr. Ya is asking about Spotify, SPOT. I guess they may have earnings tomorrow.
So they jammed up today. Do they have earnings today or do they have it? I know they were up big on something today. And I didn't know if it was earnings today or earnings tomorrow, but it already had a big move, right? So implied volatility was already coming in on this. So I would just be very, very cautious of the move. We actually sold an iron condor in here. And what we do is we use very specific levels to get out of that iron condor. So if it starts to move beyond a certain point, we just get out. Say, all right, this is a breakdown. So for example, maybe today's low, right? So if you're putting something on, you just got to be very cautious on a stock that gaps up. And if you're going to have, if it is earnings tomorrow morning, I have to look.
No, it was earnings this morning. That was the
gap. It was earnings that moved it up. So that's why that implied volatility came in, and we were looking at that kind of crunch of that implied vol. So I didn't really look into the earnings. I'm not one to be a fundamental guy. I'm more of a technical guy. So I really look at what Market Chameleon gives you, that implied volatility and finding opportunities, giving you all the great ideas because they can marry those things up with strategy. So, this is one I'd still be long if you're in it. Do I want to enter here? I probably want to see a little more confirmation that's going to continue to go up because typically a lot of these go up and then they kind of try to just tread water, find a home, and then they start to break out or break down. So I'd probably wait for that confirmation that you're going to get the up or down after that. So give it maybe a day or two and then go from there.
All right. Another great episode with Ryan. Thanks for putting it on, Ryan, and being here. It's great for the Chameleon community and for everyone who joined. Thank you, my friend.
You're welcome. Have a great night.
All right, everyone, and thank you to Ryan. Ryan, have a great night. We'll see you next Monday, my friend. Thank you.
Sounds good.
All right, everyone. Thanks for joining another Market Chameleon webinar with Ryan Mastro from OptionsRobot. Make sure you check out OptionsRobot. It is the best tool in the marketplace for managing your trades without you in front of your keyboard. A great tool, and we really appreciate Ryan coming on once a week to talk about what he's seeing in the marketplace. Everyone, have a great evening. Remember to follow us and like us on all the social platforms. If you're on YouTube right now, thumbs up, always appreciated. Comments, we will answer them. Tomorrow morning, we are on 9 a.m. live with Dimitri Pargamonik to discuss Market Chameleon tools and features. Everyone have a great, safe trading day tomorrow and a nice evening tonight.